Apparently, YouTube was not able to hear me. So let's go ahead and just retry this. YouTube, please let me know if you can hear my voice. And let me know if you could hear my voice by throwing those A's in the chat, just like we do on our public live streams, right? Master students, I want to go ahead and re-explain what I just did because I was not transmitting any audio here to YouTube. It's actually a little bit of a different setup to stream the master's course than it is to stream the typical live that we, the market preps that we do. Okay, Gar is giving me an A. Nice. Now okay, good. I am actually transmitting now. Good deal, guys. Thank you so much for participating and welcome here, YouTube. So this is actually I'm just going to go ahead and say it out loud again. This is the final week for the beginners charting and trading program, right? Before the mentorship for the beginners charting and trading will restart again in about 2 to 3 weeks. And this is what I'm broadcasting here live the final week. And this is going to be for charting and finding the tools available within the TradingView platform. Finding inflection, pivot points, the key areas, key support, key resistances. And that is what this lecture is all about. And we're going to do it live. And it will be accessible to you forever, right? So this is a gesture from me to you. So thank you so much, everybody, for coming on by. And it will also be a reminder for those of you who are not yet the master students for the beginners charting and trading mentorship coming up in 2 weeks to sign up as soon as humanly possible, right before the seats are taken. They will be, you will find the email in the description below. And that's the ArcMastersCourse at Gmail. Get in touch with me and I'll go ahead and send you the syllabus and disclaimer. The start date should be going out and the welcome packets should be getting printed by the end of, by mid this week. So if you already got yourself signed up, expect the welcome packets to the Arc University here pretty soon. And once again, to YouTube, thank you so much for coming on by. Really appreciate you here with us. And I will encourage you to open up your TradingView software. If you are using MetaTrader 4 or 5, if you're using NinjaTrader, if you're using Thinkorswim, that will also be okay. You will benefit from this lecture regardless. And that's why I felt that it was a pretty good idea to stream this live, as we are going to be understanding pivot points and inflection points all in all. And actually, this is the beginning of the modification from the beginners trading and charting mentorship. I will add charting to this, and the original, the track 5 master students will have access to the new lectures coming up, and the new students will have the benefit of experiencing this live as well. So let's go ahead and get a brand new chart up and running. Just let me know, YouTube, that you do have your software up, your software for trading, right? For charting. Let me know that you do have it up and ready to go so that we can get the lecture underway. And I will go ahead and double check here the master students in the trading team, because this is being streamed from the trading team at the trade desk inside of the ARCa Bulls Discord. And so everyone is getting the signal today. We are all here. So welcome back, everybody. Ian, you're very welcome, my brother. Okay, Hydra telling me you're ready. DJ, you are ready. Okay, DJ's ready there. Okay, and okay, great. So I am getting a ready signal here from YouTube as well. Sherlock, thank you so much. Okay, guys. So remember, this is we're already kind of knee deep into, and we're going to go ahead and keep this a little serious here and dip the music down, right? So we need to make sure that we can keep this, we need to concentrate here is what I'm trying to say. Okay, team. So I know that you're used to an ARCa that is very hyperactive and very involved with the stream and with the participation here. And audience retention. I'm aware of audience retention is what I'm trying to say. So please do not mind me if I am not those things today, as I will try to maintain, Professor ARCa's alias a little more alive than not, right? So thank you so much, everybody. Quinny, I knew you were going to get a kick out of that one. So thank you so much, everybody, for showing up. And do me a favor, make sure to hit that like button so we can get some more potential students up on this. And let's get this thing on the roll. Okay, good morning to you guys there. Sebastian, good morning, buddy. I'm here for ARCa's voice before heading to bed. Let's go, Sebastian. You're going to fall asleep to my speaking of sweet little nothings into your ear. All right, so let's go ahead and just get this thing started with a brand new layout, team. If you do have TradingView, you will be exposed to a screen like this where you will have the accessibility to observe the calendar, which is going to give you the economic events that are coming up from either worldly or specifically to the U.S. To U.S. equities. This will be your screener section here, where you can, or some people know it as a scanner, right? This is your upcoming news, whether it be company specific or macro. Heat maps would give you the stocks, crypto, or the heat map regarding ETFs or indices in general. They just made this update here. Very nice. And options beta, right? So TradingView is starting to get into the options realm. So please give them a little bit of time here, as I will say that they're on the right path. They have some good ideas regarding options and how to evaluate them and how to use them for our benefit, right? So that it's good. The strategies and everything being put up there. I noticed a drop-down menu there that had a butterfly, a flying condor. It had a debit spreads, credit spreads. It had, long strangles, long straddles. It had all kinds of option strategies within there and show you how to presently do that, which is pretty good. So just kind of keep that in the back burner for now, as they are within the beta of this. So what we're going to do right now is just start a brand new layout, right? So let's go ahead and just click on that top left button there for a brand new layout. And what we're going to do as well is observe what's actually going to move the market coming in this our next session, right? So I want to go ahead and focus you down here on this section, bottom left, down here on price, right? I want you to make sure to click on the logarithmic chart, and that would put you on a logarithmic scale. For those of you that are on Webull charts, you also have the availability to do that. In fact, every chart has the potential to switch between standard scale and logarithmic scale. So I'm going to be honest with you, about 3 years ago, I searched, why would I want to use a logarithmic chart versus a standard scale? And it's funny enough, I think YouTube ended up answering me saying that most traditionally professional market technicians believe that there is a tighter price range within the logarithmic scale. That was enough for me, right? So I made sure to always click on that L, so that I can make sure to be as good as the market technicians, right? Now, another way to do that is if you're in Windows or Mac, right? It's going to be Alt or Option plus L, and that will get you your logarithmic scale on. Now, the automatic function is not something that I typically use. The automatic function simply allows you to have a certain zoom already kind of preloaded, and as you move through the chart, it'll do it for you. And if you scroll up or down on your mouse, you can see here that it'll zoom in for you. I personally don't like to do that or use that myself, because I really like to observe exactly the width and height that I personally need, right? So I will zoom in using this bar down here, or zoom in using this bar down here via the mouse, right? So the mouse is you just wow, I am using an ergonomic mouse, right? So that has a spinning wheel on it. So I imagine you may have to hit Alt or Option plus scroll and see if that helps out, right? But yes, that's the reason why I have the setup as is, right, team? Now Now, yeah, so we're going to go ahead and load up the tools that are necessary here. I want, you may see this as a different layout than what I presently have, but I need to make sure that you guys have your volume profile, right? So I'm going to have you focus on this little thing right up here on the top left that says volume, right? VOL. Make sure to click on that settings button and make sure that it is visible to you for now, right? So I leave it very dim for myself, and that's just simply because I observe volume through different means, right? And I like to keep a tiny little bit of a view there, not so bright. But for now, we're going to go ahead and do this traditionally, and I need to make sure that you guys can have your volume profile up, right? So that is how to do that. And now let's go ahead and start loading up the tools necessary for our charting, okay? And these are going to be the tools that we will use to find confluent targets, to find rhyming targets. I don't know if you guys have ever heard of the term history rhymes, and that quite literally goes a very, very long way within charting for trading, for stock trading, for actually currencies, futures, Forex, crypto. It could be bonds. It could be anything, guys. It could be anything. We are using a specific, it just is what it is, right? There's behavior, there's psychology, there's charting, there are tools for it. So let's go ahead and now start adding the very basics to this, right? So if you have your own, I know my master students already have access to the ARCa Bulls trading moving averages algorithm that I have, or script that I have written. So I want you to go ahead and load that. But if you don't have the access to that, you know, first of all, you will have access to that if you join the ARCa Bulls trading team, or if you join or become a master student with the ARCa Bulls University. You will have access to several algorithms that I have written personally. So this is the ARC averages, and this gives you access to these moving averages. I want you to load the most basic ones for now, right? So we're going to have on the scale here the SMA 5, SMA 10, SMA 20, SMA 50, SMA 100, and SMA 200. Now, the ones that are particularly more important to me are on a larger time frame, really the SMA 200 and an SMA 50. I'll consider an SMA 10 as well. Now, exponential moving averages, if you're familiar with that, of course we use those. I definitely have them within my script as well. Very important for us to keep maybe an EMA 20 or 21 period against an EMA 9, right? So a lot of people tend to believe on a 14-day simple moving average or a 13-day exponential moving average. I personally like to use an SMA 14 against an SMA 50. Some of you may like to use an EMA 13 over an EMA 48. You may have heard that strategy through influencers and professional stock traders like the Review Dork, and I will commend them for their work. So please just go ahead and load up your moving averages here and keep the ones that I just mentioned for now. I'm going to give you a little bit of a hint. For the immediate short-term time frame, 5-minute time frame, go ahead and load yourself up an EMA 200, right? Have that in the background, right? So if you have an iteration or an instance of moving averages like this, you can have several instances of this moving average and have them controlled, right? So for example, we're just going to go ahead and make this first iteration or instance have or cater only the SMA 200 and the SMA 50. We'll go back into indicators. We'll add the ABT averages again. And this time, we're going to go ahead and remove the SMA 50 and the SMA 200. In fact, everything else. And let's add here an EMA 9 over the EMA 21. In your ARC averages, you'll notice that there is a custom field. So custom EMA length, we're going to go ahead and set it up to 21. And that's going to be custom field number 1. Right, so custom field number 1 for EMA, we're going to go ahead and leave that yellow, and that's going to display for us the EMA 21, right? So let's go ahead and see what else is being displayed here for now. EMA 9 over the 21. Oh, it looks like we left one open here. Yeah, we left the volume weighted moving average. Okay, so now you have accessibility to view to block the view, or you know, just kind of say, for example, mute, right? So let's go ahead and have your your SMA 200 and SMA 50 on one, and then on the next one, you'll have your EMA 21 over your EMA 9. And that's a pretty good way to have control over your moving averages. So, if it's pertinent to that time frame, you will have that available to yourself. I urge you to add any other pair of moving averages that you have here. Another pair that I personally consider and love having up no matter what is actually the EMA 21 over the EMA 55, right? So we're just going to go ahead and just get rid of everything here. In fact, you can go under inputs and display your SMA 5 right here, display SMA 10, display SMA 20, SMA 50, SMA 100, 200. You can just go ahead and take them off there from a master panel, right? And we can go ahead and display the EMAs like this, right? So we're going to go ahead and display the EMA custom field. And let's see, custom EMA field right here, right? So let's go right back in. Make sure to take off all our EMAs, right? Because we don't need any of that stuff. And we're going to make sure to add here the custom field EMA 1 and 2. So from there, let's just go ahead and under inputs, make sure that we can have the custom field 1 as 21 and the custom EMA field as 55. The EMA 21 over EMA 55 is critical for me, and I use that in almost every situation in any time frame period. So let's go ahead and color that EMA 21 a little bit of a darker yellow here, and the EMA 55, I usually keep it as a darker orange, and I like to definitely see my moving averages, so let's keep them as bright as we can using the color fields, right? So I know that I'm moving a little bit fast, so I want to make sure that you guys are on point with me. Let me know, throw those A's in the chat for both the Discord trading team and also on YouTube if you are catching up or if you are still there with me and still alive. Make sure to be awake during class. Thank you, Hydra. Thank you, Jason. I see you guys all there. And thank you so much, team. I will say that there is a slight delay coming in for the YouTube platform, of course, right? Because we're streaming to YouTube. The Discord and the trading team have the advantage to having me in real time. So let's just go ahead and just give it a quick second here. Jason Harden giving me an A. Thank you so much, team. Very good. Very good. And now let's see. Thank you, Courtney. Very, very, very much appreciated. Okay, so now we should have, hey, right, good to see you there. Thank you, Robert. Thank you, Chris. Appreciate you guys. Thank you, Michelle. See you there. It's Talks Chick. Hey. All right, so I want to go ahead and remind you now that we have 3 sets of moving averages, right? You have the SMA 200 over the SMA 50, which is responsible for what people call the golden cross, right? So whenever the SMA 50 or whenever the shorter period, being the 50 period, meaning 50 days of a simple moving average equation or strategy or whatever it is, that mathematical property is what figures your 50-day simple moving average. When that shorter time period crosses over the longer 200 period, 200-day simple, that's when you can call your golden cross, right? So here, for example, there was a golden cross located right at about this point here on the Qs, which is NASDAQ, on the daily time frame, right? So you want to remember that your golden cross on a daily is probably one of the most important crossovers that you can experience here. So the 14th of March, that was a Tuesday of 2023, we got the first shift towards the upside here using your SMA 50 and your SMA 200. I will say something to keep in mind, right? So this, I got to say that this was not the best crossover in the entire world. And the reason why I will say that is because if you observe closely enough, we were arguably on an uptrend on that SMA 200, but the best kind and the best crossovers to ever have are when both the moving averages that you're observing for a crossover are both pivoted towards the upside if you are in upside bias, if you are a bull. Okay, if one of the moving averages is pivoted towards the downside and one is crossing over towards the upside, that's likely a sign that's going to tell you that the upside move is in fact short-lived or will be or has a higher probability of a short-lived upside. So the posturing of your moving averages when they cross over, it is of incredible importance, and I do need for everyone to kind of jot that down and make sure to have that within your notes Always remember the posturing of your moving averages is important when observing or when waiting for a crossover strategy to happen. For example, here, your SMA 200. So it did arguably have an upside pivot here if we went in really at a granular level. So lucky that, right? Now, as you can see here, the cues are continuing towards the downside on a daily time frame. And please observe that we are getting extremely close to getting this QQQ NASDAQ ETF to the SMA 200 at about that 440.97. There is another way to observe the NASDAQ index, right? So that's going to be your NDX, or you can observe futures contracts being your NQ. And if you do that, then you're going to notice that actually, you know what? Let me duplicate this chart and take a look at the SPX, because that may be below the SMA 200 daily. Okay, no, not yet. Let me see the ES, which is going to be the S&P 500 futures contracts. Not yet. So let's go ahead and take a look at the NQ and the NDX, right? So, there is the NQ. The NQ, this is going to be your E-mini NASDAQ 100 futures contracts, is presently resisting and below the daily SMA 200. Here's a curious little fact for those of you who are now observing this. Guys, when you are below and closing your major time frames below this SMA 200 on a daily time frame, that is your first indication of bear market. Okay, so just please be very careful with this. I'm not saying that this is going to show bearish, but I will say that it's probably drawing down just a little bit here because it's averaging the total downside, including its ETF, which still has a little bit of a further downside to go down to its 441.34 level on the Q, right? So just kind of keep that in mind. But if we start closing daily closures below this SMA 200, we're going to have a reason to worry here. But I will say that if it does have exposure inside or above the SMA 200 as we move along, those are not clean closes. So there is a saying here, right? We need a clean close below the moving average or below the SMA 200 or the daily 200, right? When you say that you need a clean close below the daily 200, is observing a candle like this one, like this tiny one here, closing below the 50 period daily, right? So this is your SMA 50, and this is your candle closing clean below the SMA 50. That is a clean closure, and that usually is a validator candle for continuation to the downside. Within the shorter time frame, you have the breakdown from the SMA 50, breaks down, still has a lot of exposure to that SMA 50. All of this is testing resistance, testing. Now, usually you get a few tests of this, and then you get the downside continuation. It's a validation of resistance. We want to know that the bears are in control or they're not, and that's how to do it. That's one of the ways to observe the probabilities of resistance. We just can't get over it. And also probably watching the options flow as well, observing volume. As you can see here, this green bar followed by this green bar had significantly less volume. So that's identifying here that there was exhaustion from the bulls. The bulls are losing strength on the way up, creating a bearish divergence. Price action up, volume down. That is a sign of bearish divergence, and likely a ceiling can be found, and that's a resistance, and that can be a key level. That can be something that can be considered as a key resistance. And this is exactly why you're in this lecture today, is to identify what those resistances are using the TradingView tools that you have available. Now, remember that the TradingView tools using moving averages is public, right? You can get moving averages here of any kind if you don't have access to the ARCa Bulls trade systems moving averages, right? It's completely okay. Just go ahead and find your SMA 50, SMA 100. You may be able to find them in combination with other moving averages. It's okay. All right, so let's go ahead and now continue on and gathering our tools. So just to remind everybody, we have 3 instances of moving averages right now, and we actually blocked the visibility from certain moving averages so that we can have control over the ones we want. Top section here, if you just go ahead and show the little eyeball or the, to unhide, we're going to go ahead and see our SMA 200 purple over the SMA 50 in teal. That is something that I will tell you. My colors for my moving averages are specific to something that I will forever and ever remember. So whatever your criteria is here, always know the color of your moving average. Always have it as one color and make sure to stick to that. Okay, it is incredibly important for you to identify the color of your moving averages and keep them like that forever. Never change it. Never change it. For me, the SMA 200 will always and forever from here moving forward until the day I die will be purple. My SMA 50 will always be teal. My EMA 21 will always be yellow. My EMA 55 or the EMA 200 will be a shade of orange. Okay, those are the things that I mean. And this is specifically true for any trade professional, okay? Please remember, make sure to identify your moving averages to a specific color. That is going to help out your trading. It is going to help out your portfolio. It's going to help out your system and your processes as you build better and better habits for becoming a better financial trader. Okay, guys? So make sure to do that as soon as you can. And, good, Michelle, that's good that you can keep that as a sticky note. You know what? I can go ahead and tell everybody here else, right? So put journal your process, right? Journal your system so that you can forever add to it and attenuate little by little as you build it, right? Your system does not have to mean that it's algorithmic. Your system just means that it's a system that you have written down and you are systematic about following the rules within the bounds of that system, right? So you attenuate very little, but you know that you can, and you will always do that, right? Not every ticker is the same as another, right? So you will always have to push and pull on your process or on your system. There's always going to be a slight adjustment per ticker that you observe, because I want you to remember that it is running on psychological properties too, right? We are talking about institutions using retail for their impulsiveness, right? So we want to make sure that if we have any type of control, it would be within the control and the grasp of things that we can control. There are certain elements and certain things in the broader markets that we have absolutely no control over. But if we manage ourselves, if we manage our tools, then we would be on a better road. Okay, guys? So please make sure to be as clever as you are at your job or your profession or your hobby that you love so well. Apply that care and that criteria, that knowledge, apply that ability to the trade, because it's quite similar. Okay, team, this is something that I'm going to have you remember. Remember from our first lecture from week number 1. Remember that we were talking about the disconnection. We got to decouple ourselves from wanting to make money in the financial markets. As terrible as that sounds, as inverse as that sounds, you are going to be going against some of the brightest minds in the world here. And I want to make sure that you can keep in your brains that this is not about the cash right now. We are about the process. We are about solving the puzzle. We are about solving the markets. And we have tools to do that. And we have access to amazing things like TradingView, right? And we're going to use them to their max capacity, but we have to be disciplined and we have to be absolutely in control over the things that we can control. Okay, team, very much appreciate you for listening to that. I understand that we're reverting all the way back to week number 1, but I have to remind you, right? It is about the process. It is not about the money at first, because I promise you this, you are going to go up against traders that want to be right, and they might have a very heavy pocket. And some of those heavy pockets may be institutional, where they just want to be right, but they happen to have market curving, price curving pockets, So don't go up against those traders not being absolutely sharp. And I will say this again, guys, for my beginner traders, try to remain risk off in the markets. I understand that we need to make the money right now. I understand that we need to get to the financial freedom right away. But I also want you to remember that every single dollar that you have saved for now for the trading career, the trading journey that you're about to take, that trading dollar is going to be your ammunition for when you are ready to execute. Okay, guys, remember, the execution process is followed after, right? This is an after thing after strategies, right? Strategies is going to be the next step after your mentorship for beginners, charting and trading, right? So this is where we are right now. We're in the beginner stage. We're at the last portion of it. We need to make sure to remember that this is all part of the greater whole. We are understanding how to structure our chart, putting the tools that are absolutely necessary here, and then evaluating your potential pivots and forward testing your ability. Okay. If you are going to use, this is not financial advice. And it's a little difficult for me to say this live on a public stage like this, but I will say that if there is any risk that you would want to put on here to forward test your strategies, use minimal risk. Use minimal risk. Why? Because you need some type of risk to just feel the burn. Not enough to change your life either way, meaning complete loss or complete win. What we're trying to do right now is become consistent and become disciplined enough to make sure that we are here not for the wrong reasons. This is a craft, just like anything else. There is a love for it that I want you to find and I want you to identify. And I know and I believe that you can. Okay, so now just to remind here, one of my master students is asking me, so right here, you have the SMA 200 and the SMA 50 on the top pane. You have the EMA 9 and EMA 21. And then the third pane, or the third instance of the moving averages, has your EMA 55 or over your EMA 21. Okay, so that is exactly what I usually have within any of my trading the tools. Okay, next, let's go ahead and load up some type of volatility metric. Okay, so some of you may identify volatility as a Bollinger Band. Sure, you can do that, right? Me personally, I will add something, for those of you who don't have the access to the trading tools, right, for the ARCa Bulls trading team or the master students, I want you to just go ahead and search under indicators here, average true range, right? Make sure to have that average true range indicator added to your tools here, right? You can also minimize that size just like this. Okay, so having the true range, and Quinny baby, yes, I'll make sure to adjust your colors afterward. We will absolutely go over that. Okay, I want to make sure that you guys color your moving averages consistently forever from here on. Okay, remember. Okay, so yeah, let's go ahead and have your average true range, and what that is it tells you how much an asset can move from the opening or from the opening of any day, right? So for example, from the daily chart here, which represents nothing but intraday trading. So post hours and pre-market are outside of the bounds from a daily chart or a daily candle, right? Remember, your daily chart on any software in the world will only display price intraday without, this is, again, intraday means without your post or pre-market price activity. Okay, so on a daily time frame, this is going to be your most important zone to add that average true range indicator. You want to know how much the asset can move up or down on average. So that's something that is done automatically, right, from the algorithm within TradingView. It calculates. I mean, it really depends. Let's see what the look back is here. I think it's a 14-day look back. Yeah, it's a 14-day look back here, and it's measuring the average move on 14 days to a closing basis. So that means that from the opening of the day here on this green candle at 18,600 all the way to this target here, wherever that was, and it measures the next 14 days on average to give you that mean, right? And then it calculates the mean for you, and it gives it as simple as that top left area within your asset here. So that means that NQ moves on average $430 per day up or down. Now that gives you critical information for your next trading day. We're going to go ahead and not use the NQ here because it's a little critical. So let's go ahead and use the QQQ because that's going to be a little easier for us to observe. So the QQQ is telling you here that you can move $9.33 up or down any day that it opens for trading. So the opening bar, remember, red candles open on top, right? Green candles open at the bottom, right? If they open at the bottom, they close above, right? If they continue towards the upside, they stay green. If the candle goes below its open, it turns red, right? Remember that, okay? Keep it in mind. Red candles open above, green candles open below, okay? Now, if we're able to identify the move here on this daily, which was a parabolic downside, right? Enormous sell-off happened on this Friday. So Friday, we open up this candle. If you can take a look at these little green letters, red letters right up here, that is your OHLC. Critically important for always, for you to always pay attention to that. That means your open, high, low close of the valuation from the candle that you're specifically pointing at, right? So in this case, we're pointing at the last trading day, and it looks like it opened up on the O, $400.33, and it came all the way down. Let's see, sorry, the opening of this candle was $460.33, sorry. So it came all the way down to $448, right? So that is kind of a move there, right? So 460 to 448, you're talking about $12 there, right? So the average true range on this is what, $9 and it's $9.33. So it moved around 2 points above the average true range, which means that there's going to be further expansion as it moves in parabolic manners like this. You're going to have higher volatility, which means your average true range is likely to increase. So that means that traders of the professional kind will then have a bigger room to play with, right? So that's going to be a bigger dicking on your side. If you're on the opposing side of the trade, you don't want to be on the wrong side of the trade. And this thing is expanding, right? That's a very, it's going to be completely wiping you out. Right? So now let's go ahead and continue loading more tools here. If you are in the ARCa Bulls trading team, the simplest tools that we can use for us will be your data cells. So go ahead and load ABT data cells, and that will give you your daily average true range listed on top. You will get the current ATR, meaning that if you're within a 6-hour time frame, it'll also give you your current ATR. Not only that, is your data cells indicator or algorithm here that I wrote will also display to you the current ATR low valuation, right? So 6-hour time frame is telling you that you're moving $5.45 on average. That will tell you, so if we're moving $5.45, here is your bottom target at $443.36, and the top of that current ATR would be $454.33, figured for you automatically so that you don't have to write the math down or bring out a calculator or whatever, or use your head. You don't have to. It's always displayed to you within your data cells algorithm, okay? So remember, master students, load up your data cells here so that you can have the advantage of having that information for you at any given moment forever, right? So for those of you that are outside, not as a master student right now, remember, your simplest way for now is to look on the community scripts within indicators of TradingView and load your ATR indicator, which is average true range. If you're brand new to this, remember, the average true range displays to you how much the asset can move within the specific time frame, up or down. So specifically, the daily time frame is going to be one of your more important ones, right? Daily time frame average true range moving right now at about $9.33, displayed to you at the top left here if you just get your mouse out of the way. It says $9.33, right? That is what the asset can move as of now, up or down, any day that this opens for trading outside of your post hours or pre-market, okay? Remember that. Keep that in mind, as this will be critically important for you to always know. Okay, next tool that we're going to load up here, team, is, and I will say this, you can double click the chart at any place to hide that indicator, right? You have it here. You can hide it too, just by double clicking your chart, Mac or Linux or Windows. Okay, so the next tool that I personally like to use, and this is going to be something that a lot of you can have access to, and it's actually free. So for those of you who don't have the tools in the ARCa Bulls trade systems, right, go ahead and load up your BBWP, and that's linear volatility. So that's going to be your Bollinger Bands with percentile, and make sure to look for the caretaker. He is actually an incredibly talented coder. And the quantitative analyst for a trader that I highly respect, and I learned a lot of my statistics from. And he was a trader for the NYSE and also a licensed market maker for the top floor of the NYSE. And that NYSE top floor is called ARCa. Right. So ARCa is how I came up with my name. It's through the means of he does have his own channel, right? He does have his own a presence online, and that is Eric Crown, right? So it would be Eric Crown's Crypto Cave or whatever else. But extremely talented trader. Please go ahead and give him a follow or search him up, right? But he is very much a systematic trader, now more algorithmic than anything else, automated, and he uses very little discretion, but uses discretion in his lives or videos that he puts out to give you his personal opinion or personal biases, right? So that is a person that I learned a great deal from in his earlier days. So please remember to keep an eye for him, right? So that's Eric Crown's Crypto Cave. And that I think he should have around maybe 300,000 maybe or some odd number there of followers within his YouTube platform. And yeah, I'm not trying to shill him. I'm not getting any money. He, in fact, doesn't even know that I'm mentioning or doesn't even know anything at all, right? So I'm just mentioning him because I'm going to be completely clear to you and say that my ARCa Bulls Master students have access to a tool that is very much similar to his BBWP, Bollinger Bands with percentile. It simply means that dispersion of returns is given to you in a linear fashion, otherwise volatility in linear, within the bounds of a 100% top and a 0% bottom. I will explain why this is one of the most critical tools that I use today in no matter what time frame. I use this because this shows us how many people are entering, or actually how many people are entering orders. Long or short, it doesn't matter, as long as there is volume or, you know, a higher rate or a higher frequency of the returns coming in, there is an expansion phase happening. So expansion would be towards the upside, contraction would be towards the downside. So if we pair here something as simple as your Bollinger Bands, just like this here, Bollinger Bands in a typical fashion give you clouds, right? So Bollinger Bands, when they contract, when they get closer to each other, that's when you have your blue signal here on linear volatility. When you have expansion like this here or like this, that's when things go up, right? So volatility expansion is upward and volatility contraction is downward. Now remember this key fact here, and always keep this in your notes because I don't want anyone to get confused. I'll see you, Jay Pong. Love you, buddy. I don't want anybody to get confused with this. Volatility is direction neutral, okay? Volatility is simply telling you that there are more transactions coming in at the present moment of whatever time frame that you're in, okay? That more transactions on average are starting to expand, okay? Now, if the transactions start to slow down, that's going to be volatility contraction. So in this case here, you can see that this massive this massive upside and expansion came in as soon as we got the closing of this massive red candle, right? So the thing started spiking up. And then as we got the next ladder down, that's when we got the next spike up. That's because they're critical parabolic moves. So there are a lot of transactions happening. Call them panic sells, call them stop losses being triggered on the way down, stop hunts, right? Whatever it is, it's happening at a higher rate in the dispersion of returns. So I know here that volatility expansion is happening. So when we have volatility expansion and you pair this with the next tool, stochastic momentum, okay? I want you to go ahead and look under indicators here and just put together this indicator. It's free, right? It's from Easy Trading Signals. It's a free one, right? It's one of the most simple momentum indicators that you can. It's directional momentum, right? It's very simple. Your EMA 3 over your SMA 14 on a smoothing factor of 3. That is as basic as it gets, right? So add that stochastic momentum indicator. It's going to look different, right? Because I colored mine a little different. So yours might be purple with some other color lines, but it's still within the same algorithm, okay? When you have your stochastic momentum pivoted towards the downside and you have volatility expansion, I want you to think of that as you hitting the throttle. You're hitting the gas towards the direction that your momentum indicator is giving you. And that's quite what it did from this top side. Take a look at your stochastic momentum peaking out right up here at around 97.63% given to you in the values of percentages right on the right-hand side, right? Take a look at the top side of price action now in the candles. If I just move up my cursor, take a look that it was right here. And this thing started curving down. But not only did it curve down, it's that volatility started to decrease. That's showing you that if we're getting a decrease in volatility, that means that the buyers got exhausted. That's a critical time when I start suggesting price is going to return. Price is about to do what's called a mean reversion. If we're observing volatility through on pain like this, like a Bollinger Band, what the Bollinger Bands are telling you is that you're moving up from the mean, located here at the blue line, 2 standard deviations to the very top resistance, right? So 2 standard deviations is typically your resistance. Look around. Here's your 2 standard deviation top. 2, return to the mean. That's your mean reversion. From the mean to 2 standard deviations. We ride that 2 standard deviations until you return to the mean. You test the mean and you come back down to 2 standard deviations down. Test the mean again. 2 standard deviations down. You come back up, test the mean again. When we're ready to cross it, 2 standard deviations up, right? Those are things that we can use to our tools, okay? And we use them just so that we can have a higher probability resistance or support range, okay? Now, you can see here that the daily time frame on the Qs, not only did it break down from the mean, it came back and tested the mean as well as a resistance, but it seems as though we kind of made that move all the way to the downside. And let's take a look at that little wick down there. Look at that. Testing the 2 standard deviation bottom of the Bollinger Bands pretty damn perfectly in line, right? So that's telling you something, isn't it? That's telling you what I always repeat to you. Remember this. 60 to 70% of the time, you will get a 30 to 50% prior bar retrace. 60 to 70% of the time, you will get a 30 to 50% prior bar retrace. What does that mean? Bar, a candlestick. This candlestick is massively red. So you're talking, so ARCa, are you saying that this can retrace 30 to 50%, meaning green? Yes. There is a 60 to 70% probability that this daily candle retraces 30 to 50% up at the open of your next trading session. So that gives you a little bit of an edge here, right? But then you start to think to yourself, what else closed? Now, TradingView has a really cool function here where it doesn't give you a countdown when the time frame is closed. But if the time frame isn't closed, it'll give you the countdown like this. How do you find that countdown? Well, let's go into the settings on the top right of your TradingView platform, right? And I think it's going to be under, let's see, I think it's going to be under trading. I will figure it out for you here. Hold on just a sec. And I will give you that metric so that you can have it. There we go. So under the settings, go into scales and lines right here. And then you do this. Countdown to bar close. Always have that on. The closing periods of any valuation of any kind in trading are specifically important. You must not trade unless you know exactly where you are within the time frame of your trading. Always. The critical times to look out for. If we're going to be speaking market time here, okay? So Mike is market and Pacific because I am in the Pacific time, PST time frame, right? So we're talking about your first major closure being at 7 a.m. Pacific, 10 a.m. Eastern. Why is that so important 30 minutes after the open? Because at that hour, you're going to get closing the 1 hour time frame, the 2 hour time frame, the 3 hour time frame, and the 6 hour time frame simultaneously, all at once. And what did we just say about a prior bar retrace? So if you know that your bar is going to be closing on an hourly, bi-hourly, 3 hour, and 6 hour at the 7 a.m. Pacific, 10 a.m. Eastern time, then you're going to be risk off the market. You're going to be risk off the market because you're going to get everything. You're going to return everything that you gained during that moment, right? The next critical time is going to be at 12 p.m. Eastern time, 9 a.m. Pacific. Why? Because at that specific hour, you will get the 1 hour, 2 hour, 4 hour, and 8 hour bar closes. So just like the one at 7 Pacific, 10 a.m. Eastern is going to be your 1, 2, 3, 6 hours. At your 9 a.m. Eastern, at your 9 a.m. Pacific, 12 p.m. Eastern, aka lunchtime, you're going to get your 1, 2, 4, and 8 hour closes. Those closes are specific for day traders to remain risk off. This will give you a severe edge in the trade by knowing. This is called a prior bar retrace strategy. Risk off the market. When does it happen, though? I'm going to give you guys another juicy ass one. When does it happen? When does it start retracing the 50% of the bar? Well, as you approach the closing of the bar. So if we're talking about an hourly bar, right? If we're talking about an hourly candle, like say this one here, this hourly candle will start to retrace its 50% as it's coming down. It'll retrace to its 50% at around 10 minutes to 7 minutes to closing that candle. That is happening almost 80 to 90. Almost 80 to 90% of the time, you're getting that retrace while the candle is open. It's retracing to its 50% while it's open. And when it hits that 50%, if it's confluent enough to other resistances, historically speaking, it'll reach that 50%, otherwise known here as that huge ass gap right in there of price action, literally at the 50% of this bar. That's when it's going to hit its resistance and it's going to come back down. So you already know. Now, guess what happened at the next hourly bar? So the next hourly bar opened here. And then look what it did. It went up again. And what did it test? That gap all the way back there and the 50% of the prior bar. That is how we know. That is how we can get ourselves a deeper edge every single day we trade. That's why a lot of people are entering FOMO when the price action is already at the target where I'm taking profit, where you're taking profit with me live. We know when to enter and when to exit based on closing periods. It is absolutely critical that you maintain those notes. Do not get trapped and do not release or give back to the markets what you already gained. Remember your closes. I'm going to give them to you one more time. 7 a.m. Pacific, 10 a.m. Eastern. You're going to get your 1, 2, 3, and 6 hour bar closes. Risk off. Risk off. The 6 hour time frame and the 8 hour time frame have something critical too. This allows you less time to remain short or long your bias. Why? Because the larger the candle, the larger the time it's going to be when it starts to retrace. So meaning that an hourly bar, while it's on average returning to its mean at around 7 minutes, 8 minutes, 9 minutes, around there, a 6 hour or 8 hour bar will start retracing because of the massive time frame. It'll start retracing to its 50% at around 15 to 20 minutes. So you have to start planning way ahead. You have to start planning way ahead. And that will give you a serious edge in the markets, you guys. You always ask me, guys, you always put it in the chat. You always put it as jokes. ARCa's a wizard. ARCa has a crystal ball. No, hell no. I don't. I have a clock. And it says that it's going to be closing the 1, 2, 3, and 6 hours in fucking 10 minutes. I'm risk off the market. And you are with me too. Because of the higher probability, because of statistics, higher probability outcomes. We quantify that. We execute that. We respect that. Always. Never let go. Always respect it. Next tool. Let's go ahead and get rid of the standard deviations here from the Bollinger Bands. 2 crystals suck my balls, says Michelle. So guys, this is critical information that I'm passing on to you because I want you to know that I will forever continue to blow your mind. As long as we are together, we are learning. We are forever going to be students of our craft. But if you don't have the screen time, if you don't have the charting time, the trading time, the experience trading behind the screen, then you're probably not going to know all of this. But this is why I'm here. I want to make sure to expedite that process and get you to start making life-changing choices. But in order for me to have you do that, I need you to help yourself. Remember, the beginner's charting program, the mentorship program for beginners and strategies, which is right after that, I am talking about an almost 19-week commitment, over 20 weeks commitment here, that you're with me, that you have access to me, that we're going to be observing the broader markets together. We're going to observe strategies. We're going to observe how the market dynamics happen within statistics. And then we're going to see how the fundamentals apply within those stats. You're going to blow your mind again. And then this is where a lot of people start to wonder, ARCa, are you short this stock? Are you a pump and dumper? Fuck no. Don't offend me like that. I never will do that. I can be fine. All I have to do is just turn off my stream and trade by myself and it'll be okay. Why would I know this? Because of the metrics that I just gave you, guys. So if we're moving to the upside and moving to the upside and moving to the upside here on the Qs, right? And then we have this huge tweezer top, bearish engulfing, true red outside bar. We're talking about a trifecta of bearish signals coming along. That means 50% prior bar retrace, right? 50% prior bar. Testing the resistance of 2 standard deviations up because we're already maxed out the top. And then as soon as we validate resistance, bam, we fall. It wasn't the short institutions. It wasn't market manipulation. It wasn't anything else other than market dynamics. And guess what happens when that happens, team? This is when all the FUD comes out. This is when they're saying, oh, this stock is about to lose all its value because the CEO sucks balls. And this is the CFO, he's going to maybe quit one day. And there goes your asset selling off. You're thinking that it's selling off because the shorts are doing it to you. No. We simply hit 2 standard deviations up and they're taking advantage of it through your psychology. They're using your psychology at 2 standard deviations up to go short. What the fuck are you doing in? Get out. Get out of the stock. Because we know now where to be. And you wonder to yourself, why is ARCa saying all the time that he's short biased? And why does he say all the time, fuck the institutions and fuck what they do, fuck the short sellers, because I'm going to give you the short targets? Why does he say that all the time? Because I do short. And I'm going to give you their targets because I don't like what they did to the beginner traders, to our capitalism. They're ruining our capital markets. So I'm going to oppose the shit out of that. I'm going to show you how they play it. How about that? Fight that. Fight me on that. What are you going to do to me? You're going to do nothing because everything I do is mathematically based and public. I run math. I run statistics. I run physics. Are you going to tell me that that's manipulated? That I'm manipulating it? Good luck. Good luck when it's public as fuck. No, sir. I am not manipulating the markets. Your short signal came in because we were 2 standard deviations up. Your short signal came in because the freaking volume was decreasing here as we were going up. Bearish divergence. Topside resistance. 2 standard deviations top. Tweezer top, true red outside bar, bearish engulfing. Guys, come on. No need to create the threads on Twitter X. No need to create a forum where people are going to start talking about why they manipulate. No. We use fundamentals against technicals and statistics. Then we observe what they're going to say. So what they're going to say about the hit piece, right? We're going to get a short fund to say that this is about to freaking, they just printed a terrible chip in the market and their AI chip sucked balls. So we're going to determine now how bearish that announcement will be. And that will tell us the underlying asset's downside historically. And if we don't have a historical iteration within the asset that we're trading, then guess what? We have an entire sector to backtest of similar valuations. Semiconductors, Texas Instruments, NVIDIA, AMD, AVGO, SMCI. Guys, there's a shitload of them out there. We have enough data in the markets to backtest a whole sector and see what the hit pieces will do moving forward. Incredible stuff here, right? How is it that you nail those fucking targets all the time? It's because they already set the target. They already told us the target, and the chart is already giving you the target. It already is there. It's already there. Now I just need you to see it. And that's where I come in. I'm going to open your eyes. I'm going to open your eyes and expose how probabilities and price, market dynamics work within the chart. I personally don't look for any catalysts. I ask for the catalyst daily from you guys because you guys tell me, I'm like, hey guys, there is a massive signal here on volatility versus stochastic momentum. I think I've said it before, right? When we were playing Tesla from $250 to $160, not a single soul believed ARCa bulls that it was going to go down to below a fucking $180 from $250. How would you say that? If y'all remember correctly, my family was getting threatened because I put that piece out. Well, not only was I right, but I was fucking right. And we all did it together. We started observing together the fundamentals after we noticed the signal. Remember, not a single word had been said when I told you guys that Tesla was going to drop 40 to 50, maybe more points. Sub 200 is how I remember saying it. Not a single bearish catalyst was out yet. And that's what I mean by people saying, ARCa, you got to be short. Either you're short or you're a wizard, you have a crystal ball, or you are Ken Griffin. No, it's just volatility and momentum just happen to have a certain criteria that we can backtest that historically had shown a huge sell-off. And that can be seen. That can be seen on volatility in linear. This one here. Because after a phase that contracts for several days in the bottom side, printing all those blue bars like this here, a pretty strong move towards the upside or downside can happen, right? Look at all this contraction, right? And we're kind of hovering here. And then as soon as we start breaking above from all this blue here, as we expand, look at that. It's simple. It really is, guys. I don't want to spread any FUD. I don't want to. I'm not the guy. I am not the guy for that. Right? People tell me, oh, you're full of shit. You're not going to be able to do nothing because this is a squeeze play and this is blah, blah, blah. You can't chart the blah, blah, blah because of the blah, blah, blah. Guys, there's a fucking chart here. And if we're talking algorithms, you're telling me that we don't have we don't know what price. Guys, algorithm is mathematical. What does mathematical mean to you? That means that is coded. And what is coded to you? It's mathematical and reverse. That means numbers. That means iteration. That means behavior. Repetition, fractal. That means that we can measure the outcome and we have backtests to understand the probability of continuation. The reason I know this, thank you, Ripe, is because I am a stock trading instructor like I'm instructing right now. ArcMastersCourse at Gmail. please make sure to get signed up, and we're not done. We're not done. Sign yourself up for the beginners trading and charting program, because this you're experiencing here the last week for those beginners before they move on to strategies for 12 weeks. This was an 8-week program here. They're finishing it off right now, and they're about to, this is their culmination, and they're going to continue now towards the strategies segment. The beginners segment will start again in around 2 weeks. Sign up. Send me the email. Let me send you the syllabus and disclaimer, and you do you. That is my way to contribute to society. That is my way to do my thing. Let me give you guys the short thesis, and you'll see. And then you're gonna wonder, well, why do you need our money? Why do you do this and that? Well, I don't. Why don't you join the trading team live and see for yourself that I am trading this entry live and exit live in front of you, right? And then people are wondering, oh shit, so he actually does it live? He's not just talking in hindsight. No, guys, come on. I'm not that influencer. I'm not that guy. In fact, I never really wanted to be an influencer. I wanted to be, I just wanted to save my son's life. Truth be told, I just wanted to save my son's life because he was dying. And this was all I had. So I stuck to it, and I stuck to it. And I saved my family. And I want you to do the same for yourself. So get in touch with me, and we'll see about how we can observe the markets through a different perspective. Okay, guys, that's what it's all about. I don't want you to have to rely on any influencer again. I don't want you to have to rely on a subscription, because you could do that for me. You could join the trading team for $9.99 a month, or hit that one-time fee. Yeah, all good. But that's not what I want for you. If you become my master student, I want to teach you the ropes here so that you never have to come back to ARCa, or anyone for that matter. I don't want you to have to rely on trade signals, trade alerts, none of that. I am going to teach you how to be self-reliant forever. And I want to teach you how to be completely streamlined. That means that you will also know how to shift your biases, short and long, or long. And then when the narratives change, you will also know how to identify that. There are so many things in the market that we need to talk about, which is why it's segmented now. Fuck the subscription. Fuck the trade alerts. I want you to never look back to me again when you're done with this course. But if you do, and I have a lot of my master students that are continuously joining the trading team because they feel that they can pay it forward to the next trader or whatever that may be, but they are all coming back. And that's our trading team. It's built from ourselves. We are self-made. I have incredibly talented traders there that already were super talented, like options, like OGG, right? But the majority of my very talented traders are built by ourselves. We did it to us, and we are becoming that army. And that's what I want for you. My goodness, brother, thank you so much. Right, case pack, buddy, thank you. EO in the chat, bro, thank you so much for saying that. He's actually my track 1 master student, and I rarely see him. I rarely see him stop by, and I love that he's here to express what he just said. He just said, you set me free. Pioneer Master Trader, guys, I will tell you that I don't particularly want to look at myself as a pioneer at all. I don't want that. I want you to take the strategy from a winning strategy, and then use that strategy to make it who you are. Find yourself as the market participant that you will be. And that's what I want to help you do. Okay. Next tool. Let's go ahead and make sure to make this happen here before our time is over. EO, good to see you in there, buddy. Thanks for coming on out, man. C-Spill saying, some say ARCa got that magic stick. Love you, buddy. All right, guys. So now we have the data cells located. This is what we're going to do now. We have volatility loaded, right? If you don't have the ARCa Bulls trading team volatility heat map, the VHM, which is this here with the heat map in the background, this is why I'm telling you the public script. You can use the public BBWP from the caretaker, and when you are a member or a trading team member, you will have access to this and this. Okay, so let's just go ahead and move on from here. Okay, if you don't mind, I'm just going to get rid of the VHM here because the majority of people are actually there's a pretty clean split, trading team versus the outside world. Okay, let's go ahead and identify the pivots. How do we do that? What do you look at? What do you look at? Because when I see this chart, ARCa, this looks like a whole bunch of hieroglyphs. Like, what do you even do? How do you identify like what you call a support? What the hell is it? Okay. Well, pivot points are simply areas where price action has reversed. Okay, so as simple as this for now. This is a pivot. This is a pivot. This is a pivot. And this is a pivot here. Those are pivot points, right? And now even to the upside, we're going to start this off very simply. Even to the upside, we have a pivot here. We have a pivot here as well. I know that you're starting to see the patterns now. You're starting to see how, oh, okay, you identify the peak. Yes. Those are your pivots, your inflection zones, critical supports, critical resistances. Okay, so now if you start to maybe add some trend lines to them, for example, this bottom one here, and you start to add maybe another, like there's another one right here, right? There's another pivot point right about here. And then you start adding other local pivot points as such. One here, right? And this one on top right here. Where's price right now? Oh, damn. Price is right there. Oh, shit. That's a pivot point. Nice. Wait a second. So you're able to identify other pivots historically and we can use them in price present day? Yes. It's as simple as it is. We identify prior historical price. We identify historical price. And that's how we have our pivots. So I'm going to mark that line again here because you can see that it's red. That's where market close happened, 448.69 Friday. That's where we're supporting from right now. Okay, so how about this? Because there is a pivot right here before price action completely reversed. And we said that all the market manipulators were all there killing us. Well, no, they weren't. That's a bearish engulfing, true red outside bar on a daily time frame. That, that means downside. Bearish engulfing, where the red candle completely engulfs the prior green one. You're going to learn this in the freaking first day with me. How to identify the short, how to identify the downside is where I will take you first. So not only did it print a bearish engulfing there, but why don't we just go ahead and put a line there? How am I drawing this vertical line, a horizontal line? I am drawing it with Alt or Option on Mac plus H. Now, if you want to draw a vertical line, Alt or Option on Mac plus V, and you have the vertical line. Okay, now check this out. Here's that pivot point, right? Why did we resist there? Well, because that's where we were before. And again. And again. So if we made a move from this target here of $443 and we went up all the way to $486 and pivoted right there, how the hell are we not going to... That's where logic steps in heavily. How in the world are we not going to respect this massive jump? That resistance there is likely going to be respected. The probabilities are leading towards a massive short signal right there. Get out of the market long. You start looking for your short thesis. You look at historical values. And that's how you were able to mark this top side here. Everybody's looking at this. We're going to go to the all-time high, $503. Here we fucking come. No, guys, come on. We have another inflection there. We have to take care of this one first. And then we came down and down and down and down and down and down, ignored every single gap known to mankind here. Every single moving average didn't matter. The moving average didn't matter. The fundamental didn't matter. None of that shit mattered. What mattered was that we came to this pivot point back here, right there. That's what it did. While it seems that price action is random, it's not. It's mathematical. It's fractal. It repeats. It rhymes. And I'm showing it to you over and over and over for months and weeks on end. Don't let me take you all the way back to the beginning of time and show you that. Because I will. Price action behaves the way that it does because we previously behaved the way that we did. Let me explain that to you in a very rough sense here. If you go up to your stove and it's on, there's fire coming out of that fire, and you touch the fire, you're gonna get burned, right? Ouch! That shit hurt. What's gonna happen the next time that fire is there? Unless you're one of those people that have a strange addiction, you're just gonna go for it again. But since you're not, you're probably going to stay away. So the higher probability is that you're going to stay away from that fire because it burns. So if you once felt that, that means that next time when you're faced that iteration, you will likely respect it like you did the first. And then guess what? You will do it on the third time around. And then guess what? You're going to do that at the 5th, 6th, 7th, 8th. And then when you pass 21 times, you create a habit and you will never go back to that. But there are times that something fell inside of the fire and it's your sons or daughters, whatever, and you need to go in there and get it. But you can't put off the fire for some reason because it's being fed unlimited gas. So there's your probability base. There's your one instance where you had to go in there for some reason. And then you have a deviation. You had to do it. It's behavioral. It's completely psychological. And price is that. That's what we do. We remember where we topped out. But not only do we remember, is that we plotted it ourselves. We bought it and shorted it there. And that's how we know the probabilities of those resistance, the key resistance. The key support, inflection. It is inflection for a reason. And that's how we identify them. Now, guess what? Let's look at this. This, let's just say, this candle here. That's a day's worth of price action. So that means here that you have two 12-hour candles in there. Roughly. It's displaying to you only the 8 hours of the price or whatever, right? But you have the two 12-hour candles within this. You have, or the two 8-hour bars, better said, the 4 4-hour bars, the 8 bi-hourlies. You see where I'm going? The shitload of 5-minute bars. The infinite amount of 1-minute bars within this one. What I just showed you here in a macro perspective is also true within micro time frames. Because if we go down to the 1 minute, just like this, let's go to 1 minute chart and highlight what the day looks like. Your trading day is this right here. This is your 1 day candle right in here. That daily big ass candle that we saw there is consistent of all of this. Right? Okay. So if we are to map out the inflection zones here, let's do them. There's inflection right here at the very, very top. Or why don't we do it like this, actually? Let's go to this day, the day prior to this one, and let's map out those resistances. Okay, so we have resistance up here as a key level. We have resistance right here as a key level because we noticed that we also repeated it right there, right? And right here in the post market, pretty nice. And historically speaking, you can see that we kind of supported here, broke down, resisted right there, continued. Nice. We also use this right here, breakdown, resistance, validation, downside, but we've faked out. And then we supported all over that line and then broke down, tested that line, then we continued. So that line is very, very, very apparent. Like we know we repeat things, right? Psychologically, we're going to repeat it. So we're back. We're going to put this line there. Okay. The next area is that we can use this bottom zone as a key level too, because price went up, created an inflection, then bounced a resistance, then broke that inflection. So let's go ahead and use that as a key support too. Great. We used it right here as a resistance. We used it right here as a resistance, right here as a resistance. All this was support, 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 support. Breakdown, resistance, downside. Resistance, breakout. Oh, you get it, right? You're starting to see it. Now, why don't we just go ahead and take a look at this? Let's do this as a bottom side support. This is an inflection zone. What about this one right here? Sure, that one's an inflection zone too. We used it right here. We used it right here, right here. We used it right there. Okay, so now that we have all of this downside or all of this area here, that means that we have some zones to look out for on the next trading day. So let's see what we used. Okay, great. So it looks like within the price action, all these lines, remember, we marked them because of the prior day. Here's the first one, or the second one. Nice. We nailed it. Here's this other one here. There's that red bar, just resistance, fall. And then guess what? We break down, we resist, validate, and fall. And this is where people start to say, we're getting ladder attacked. A ladder attack just simply means you're breaking inflection, validating resistance, breaking inflection, validating resistance, breaking inflection, validating resistance. That's all it is. And we continue, right? So now that we broke down that whole freaking day, we're like, holy shit, we're starting to fall deeper. What else do we look at? Okay, let's look at the pre-market low. Here's the pre-market low. And it looks like the Euro open low was down here. So why don't we just make a little bit of a zone right there? Because there is a probable bounce at that area. Let's make it there. Pre-market low, Euro open low, and let's see what happened with price. And you know what? Let's go ahead and just dim the red on this a little bit because of the red bars, right? We're going to do it like this. Okay. And guess what? Right there, we bounced. Huge upside. And then bounced again. Big ass upside. And then we broke below. Damn it. We couldn't hold that support. Couldn't hold it from the pre-market lows. So then we start dipping even harder. Then we panic. We're like, where the hell are we going now? So that's where we start looking at the hourly. Let's go look further. Let's look further into price to see what we can do to gain ourselves an edge over where price action may go. Here's our day, right? Within the hourly time frame. So let's look back. What else is coming up? Because we just broke the pre-market low. We broke the prior days and the previous day low. Like, where the hell are we going? So we look at history. So then this is right here. Check it out. The low, that's the Monday, August 12th. That's the low. So we came down to Monday, August 12th low and we bounced. And then we continued. And now we're kind of consolidating within that low. And also the top of this trading day here on Wednesday, August 7th. That's the top of the price action resistance, which is also the low of this day on August. So what I'm trying to get at here is not only are we using the macro time frame here, right, to identify the huge inflection points like these, like that, like this one here, like this, but I'm showing you that this same dynamic happens also in the micro time frames, in the 1 minute time frame, the 5 minute, the hourly, the 4 hour, they all have their own inflections. Tell me that shit is not absolutely cool. Now, I want you to load in your favorites tools right here. Okay? Go to your favorites. And the way you do that is, for example, this here. This tool is a text box. You can type cool things there. Leave it as a note. Say, this area right here sucks a lot of balls. We don't want to go there. Right? So what you do is that you identify where this tool is. Where is that tool? That is located 1, 2, 3, 4, 5, 6 from the tool panes box down. Click the little arrow to the right, and you'll notice it right there. Call out. Hit the little star. You see the star? You see the favorites toolbar down there? It's blinking. That's how you get it there. And then you hold it and you move it to where you want it. Unless you have something that has that little star, you will not see this movable toolbox. You can use this toolbox or hide it using the star at the bottom left of your chart. Down at the very bottom left of your screen is that star. Enabling and disabling it will show you your favorites toolbar. I leave it down here always. And those are the tools that I use. Okay, team? I want to make sure that you understand how to get all these tools. If you want to know which ones I have, this is your Fibonacci retracement tool, right? That Fibonacci retracement tool is located second from the top, and it's called Fib Retracement. Put a star on it. Shortcut that. Alt F. Fib. Damn. Awesome. How about this? I'll give you some more tricks because we've already extended the time. If you want to change the time frame on your chart, simply look at 2D for 2 day, 3D for 3 day. You'll see it in the background here. 4D for 4 day. How about 24H? That's a 24 hour. How about 1H? 1 hour. 4H, 4 hours. How about minutes? 1, 5, 15, 10, 30. You hit the number 5, enter. You hit the number 3, enter for minute candles. Hourly candles, 1H, enter. 4H, enter. 6H, enter. How about this? 5H, enter. 13H, enter. Wait a second. What are you talking about, ARCa? 17H, enter. Have you ever thought to look beyond what's available to you, what they make available to you? Think outside the box. I'm going to leave you with that hint here. Okay, YouTube, remember, reach out to me. ArcMastersCourse@gmail.com. I know no excuses on your education. Reach out to me right away. I want to see you present and in the front in the coming mentorship for beginners charting and trading. starting in about 2 weeks. Take it, remember it. Make sure that your seat is available. It's getting taken up. I appreciate everybody for coming on out. Trading team, wait for me. I'll be right in. YouTube, I love you very much. Thank you for coming on out. Make sure to hit that like button, subscribe to the channel, do everything necessary to get this thing to really pop off. And let's continue spreading the good news throughout the financial markets. Okay, guys? So with that said, I wish you well. Love you, EO. I'll see you guys very soon. Thank you, team. Thank you again. I love you all very much. Please take whatever I do show and iterate within these videos as just a form of entertainment, as I cannot suggest for you to buy, sell, or hold any assets whatsoever. Ever, 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 ever. I need you to do your own due diligence and everything will be cool. But with that said, I wish you well a very, very good rest of your night and or day. And I will catch you at the Bell Mañana. Adios!